Welcome to the Dividend Talk podcast, episode 93. Dividend Growth Investing with Aleks from Lithuania. Hey guys, welcome back to another episode of Dividend Talk. Today we're going to discuss with Aleks dividend growth investing from a Lithuanian perspective. All that and more. See you on the inside. Hey, European DJ. How are you this Sunday afternoon?
Sunday evening, Derek. I'm fine. Thank you for asking. It was a busy weekend. As some people might have seen, I was a bit also busy on YouTube. I analyzed ASML because it was the most voted stock on Twitter.
Wow.
But actually, I'm really happy because we have Aleks with us, also from the Facebook group. One of the persons, I think you must have been one of the first members actually on the Facebook group, Aleks. I remember you at least from quite some time already ago when we had just few people on there.
Yeah, so quite exciting. You're our first Facebook guest that we have on the show. We love having obviously people from all over Europe, and it's good. I think we had a guest from Estonia. Now we have another one from the Baltic region of Lithuania. So quite excited to have you on the show. And if you could maybe give us a little brief overview of who you are and what you do.
Thanks for having me. I mean, this is really exciting for me as well to join your podcast. I've been a fan for maybe 2 years or a year and a half or something like that. Well, I started. I'm quite new to the dividend investing journey, as we call it, right? I only actually started late 2019. And then imagine COVID hit. So the first positions went south pretty quickly in March, but it was kind of exciting, like a supermarket. And I haven't been really investing actively before then. So it was mostly like these mutual type things, mutual fund things where you invest some part of your income and then never look at it again. But at some point, 2.5 years ago, something clicked in a way. And if my memory serves me right, it was actually PPC Ian's videos that inspired me, because it was just epiphany in a way that, okay, this is a way that is well, definitely not risk-free. There's plenty of risks there, but the effect of seeing this slow income flow and the snowball eventually growing and growing kind of triggered this new passion in me, and I've been quite passionate about it, and hopefully will continue for as long as I can, for decades.
Thank you, Aleks. And I think many of us started actually like you in a similar way, and specifically also with Ian Lopuk. I mean, we had him on the show here last year, and it's always Jason Fieber or Ian Lopuk that really inspired many people. And I even wonder if they realize what a multipliers they have been for the world dividend growth investment communities. So really funny to hear that also from your side. And then Ian Lopuk must be doing something well, because if he pops up on our YouTube homepage, right, it means that the algorithms are really working in his favor.
Well, I think he's like explains this in a really simple way, and the way he makes these kind of blackboard charts and things like that, and the Excel files. It's and talks a lot. So I really like him. Yeah,
He's
there
he's
are
one he's one of the rare people that can make dividend investing sound fun. Not many people can do that, so I think that kind of helps. But he's a great guy and inspires a lot of us, and I'm glad to hear that he has inspired you. So quite looking forward to hearing your journey, actually, which we'll get into a little bit more on the show. But before that, we usually talk a little bit about the news and what's going on. I've been away for most of the week. I haven't actually kept up on anything. But one thing that did pop up for me was Warren Buffett, I think, initiated a position in HPQ, which is something European DJI did a video on recently.
Yeah, that's true. So he started effectively buying a stake in HP Inc. So he bought approximately, what is it? Was it 4% or 4 billion? I believe 4 billion. I mean, it's a pity. I just don't own so much HP yet. I wished I would have bought more. I bought an initial position, and I can't buy everything at once. And I also don't want to buy the same stock 3 months in a row. It's just, I don't know. There are so many opportunities, so it's a bit of a pity because suddenly the price bumped 15%. And actually the day before I was even looking at it and think like, maybe I should sell put option or something like that at 30 or $30. So, it went up, but maybe it comes back again. There's all this recession talk, inflation talk, interest rate hike talk. So, who knows, maybe in a week from now it gets back to the original price and it becomes a nice opportunity again. But in my video, I come to the conclusion that it has effectively a 12% shareholder yield if you look at both the buybacks and the dividends. I mean, I'll take it. No problem for me at all. It's a boring business, laptops mainly, but I don't see them going away at all.
I heard a rumor that he watched your YouTube video and that's what helped him buy the company.
On his Nokia 31, what is it, 10?
Yeah.
And maybe he did. Yeah, and there was
So-
actually more in the news, right? Because when you think about it, I believe that, I mean, let's start with Starbucks. They are suspending their buyback program. Have you heard about that?
For me, no. You know my position on Starbucks. I don't really keep up to date, but pretty sure it's interesting for most of our listeners. I mean, Alex, have you got shares in Starbucks?
No, not at this point, but I'm quite interested in the company as such, and I don't drink Starbucks coffee. I just can't imagine paying that much for coffee. But as a brand, I just see that it has tremendous power and scale. And of course, you see, okay, they stopped the buyback program and the share price tanked, and you immediately see who owns, who is the shareholder. So it's actually quite an attractive, I think, company from a dividend growth perspective. So that's why I'm quite interested in it.
Yeah,
And
same here.
does suspending the share buyback program, will that affect your decision in having an interest in them?
Not the program itself, probably, because, okay, let's face it, it's financial engineering, like most other companies do, but at the same time, it also has an effect on the dividend growth per share, because a company can basically keep the total dividend amount flat and raise due to the buyback. But I would say just because the share price has gone down, not just because of the buyback, but in terms of the last 1 year or 6 months, has gotten much more attractive. So not really the buyback itself.
Yeah, so I'm really happy with this cancellation of the buyback. I think the company was just going too much in depth, and I know there are people on social media that are saying like, "Oh, negative equity is not bad" and such. In its sense, it's not bad, but you see the interest payments being increasing. You see that the cash flow is not maybe increasing even that much here. You see that there are problems worldwide. There was a pandemic, right, which really had required them to close the stores. So there was a cash flow impact as well. So I think it was just not really adding shareholder value, only on the really short term. So I don't know why they were doing this for shareholders. And what you see now is that the buybacks get canceled, the share price drops. It is going towards one of the lowest points in the last 2 years. So what was then the benefit of all these massive buybacks, right? If it was not for the share price. So, in my opinion, I'm happy that Howard Schultz is coming back. I hope he cleans up the mess a little bit, and that he indeed invests back into the people, into the business that made this business also a success. And from there, there's better guarantee again on how you say it, in improving fundamentals. And I hope he one day fixes that. Most of the time, the shop is empty at the Starbucks. Maybe they finally get some proper food in there. I don't know, but that would be for me really the upside on Starbucks.
What am I missing on this company? Because like where does the growth come from these guys? We're looking at a high inflationary environment at the moment, and the first thing people are going to cut out is buying coffees. I mean, you can't. The price of coffee in there is ridiculous. First of all, compared to I don't know some of the other brands we have. But where did these guys grow?
I think it's from opening stores a lot, and then also the ticket price. And what I really like about them, they have the Starbucks program. They are really innovative when it comes to payments, ordering.
Yeah,
I think the business is really really rock solid. It's just not the same as the stock. And to your point, I don't believe that they will sell less in an inflationary environment or recession, because I think Starbucks has still this point of, let's say, €5 that you
yeah.
can treat yourself on the Starbucks in a recession. I think restaurants, not going to the restaurant, at least you can still go to the Starbucks. That's how I look at it. The pandemic has showed us that when the Starbucks are closed, you can't go, but still people were massively in lines once they opened up again quite quickly, right? So I think there's a lot of stickiness to the brand, and I see also that's quite defensive in a recession.
Okay. See. And what about Elon Musk then? He's been in the news again, and he's quite active on Twitter about Twitter quite recently.
It's so funny, guys, that the announcement came that he took a passive stake, right, 9 point something percent, but he immediately started commenting, and then this all hands meeting with the CEO that has happened or will happen. I'm not sure. So it's it's kind of not really a passive stake.
Yeah.
It's quite funny. I mean, he's been talking about Twitter nonstop since he's bought this position in him. It's I don't know how he does it. I really don't. But he seems to want to make an improvement there, or maybe he's just not happy with being banned the whole time and just wants to make sure that he can say what he wants.
Well, there's some funny things, right? So he wants to introduce an edit button on Twitter. He mentioned that if you pay $3 per month or something like that for this premium feature, you should get such a check mark. Yeah, you shouldn't be wondering about. Today, he had a poll which 97% answered, and positively on that was like, we should turn the Twitter headquarters into a shelter because nobody's going to the office anyway.
Imagine buying a 10% stake in a company because you want to add an edit button to their software. It's crazy.
That's 2022. It's a meme story for me. But
Okay.
well, I think it's time actually to move over to you, Alex, now. And one of the traditional things here that we always do are the rapid fire questions. So what I will be doing now, will be asking you 5 questions. You need to choose between the 2 answers. And then afterwards, you have 1 question, an answer that you can reflect on. So are you ready?
Yep, let's go.
Okay, so the first one for you. Would you prefer to see Lithuania at the World Cup of football or winning the Olympics with basketball?
Oh, well, the Olympics with basketball for sure.
Super. High yield, low growth, low yield, or high growth?
Okay. High yield, low growth.
Dobrze. Ceppelinia or salty barszcza?
Zeppelini.
Reduction in dividend tax or reduction in income tax?
Dividend tax.
Unilever or Nestle?
Well, currently Unilever, that's for sure.
Super. Is there any of these questions that you would and answers that you would like to get back on?
Well, the question was about the one of the 2 traditional dishes in Lithuania. I'm not sure, guys, if you know any any of these. Maybe EMF has heard from
No,
his
no,
friends.
I didn't even know these questions were coming, so I had no clue what they were. I'm interested to hear why you said a reduction in dividend tax over income tax.
That's a good point, because a good question actually. And a couple of weeks ago, I asked your opinion. Okay, what do you think? Is this sort of tax inefficiency with dividend growth investing? Is it sort of maybe hampering our overall long-term return? So in all fairness, and I'm thinking that when I'm answering this question also about this pan-European dividend withholding tax, to make it simpler, like if you own Nestle, that you don't get killed, not at the tax counter, or make it easier to get the refund eventually, and where you don't need to jump through all these hoops. So it's not necessarily so much to lower the tax rate, because obviously that depends on where you live, but I think that's a major issue for us, to make European investors, to make it easier and harmonized, to kind of be treated as a single market,
Yeah.
as a European single market, because all the politicians tend to, proclaim and say this is the European single market, but in reality, it's still far, far from that.
Yeah. Yeah. No, I understand, and I completely understand where you're coming from with the tax inefficiencies and affecting your total return. It is an ongoing debate here, certainly in Ireland, because property investing would possibly be more tax efficient for me, but obviously requires more capital, more risk, and there's a lot more legal requirements and stuff that you have to do. But I mean, it just depends on your personal circumstance. But it's certainly hard. It's hard for investors, and you want to make the most money possible, but the risk has to match that as well, and that's why dividend investing is so appealing to me.
Yep.
Cool. So maybe we get into some questions further, Aleks, because you mentioned already a little bit about how you got into dividend growth investing. But could you also tell a little bit about, and I believe you don't live in Lithuania at the moment, right? But what is generally the culture in Lithuania when it comes to dividend growth investing?
Well, I think it's fair to say that basically doesn't exist, and due to the fact that the local stock market it's quite small, there are maybe not a handful, more than a handful for sure, but there aren't that many companies trading on the stock exchange. And I was for sure looking for companies in the local market, but you get the utilities which pay a dividend. You get one clothes retailer, which is quite a large group, but it's sort of, you could say, inconsistent. It's not really dividend growth investing. So the whole stock market culture is still in its infancy there.
Yeah.
So it will take more time.
And what do people then typically invest in, for instance, to retire early or to build wealth? Is it in real estate, like having a flat in Vilnius or something like that?
Yeah, that's in my understanding, that's really how people get ahead. So you can meet people that own 5, 10 or more apartments that generate income. So stock market investing as such, there are of course various products that you can buy, like funds that the banks and insurance companies sell, that are really a terrible idea.
Yeah.
But real estate investing for sure.
Oh, yeah, it makes it just so much harder, right? If you're in a small country with a small stock market, because for me, there's a reason why I'm invested in Shell, Unilever, Ahold, because I grew up with those brands around me, right? If we went to the gas station, we went to a Shell. If we went for shopping, we went to Albert Heijn. And then it makes it really relatable. It makes it also so much easier to be a dividend investor or even a stock market investor, right? If you recognize those brands there.
Yeah, for sure. And I mean, the Baltic states were quite young as in its newest form since 1990, and it will take time. But I think we are now fairly well integrated into the whole European market and culture and way of living. So I'm quite proud of that. But it's just a thing that takes time.
Being quite young, there must be some opportunities there then, particularly as it's not a big stock market. There must be some companies there that there's lots of opportunities to maybe invest in that some of our listeners might not have heard of.
I think, yeah, the stock market, it's really, I would say, so shallow in terms of liquidity that
too big a risk.
Yeah, too big a risk, and in a way, like a lot of the former state enterprises, they've been divesting their ownership to the general public. Then there's the banks, but the banks are mostly Scandinavian banks these days. There were some let's say more local owned banks 10-15 years ago than there are now.
Yeah.
So, and it's kind of been, I think what I've been observing is the stock market's kind of been shrinking in the sense of how many companies are traded on it. But there are positive stories like this. Our main electrical utility that's again divested. It's a part of a state-owned enterprise, and they divested, made an IPO, and they pay a good dividend. But I'm just looking at that, and I was discussing with a friend. Okay, where does the growth come from, really? They buy small stakes in foreign wind farms and things like that, but it's I just want to look elsewhere, to be honest.
Okay, so it's rare then to have someone from Lithuania in a dividend growth investing culture. So what is your goal with this? Where do you go with this?
Well, I've kind of set a goal, a target horizon of 30 years for this. So I'm 37, so that's I would say probably extremely long term, and who knows what might happen. And my goal is not really to sort of retire early. I don't really see myself as not working. Maybe, as you guys have been discussing, like maybe working less at some point, 10, 15, 20 years from now. But I kind of like working, being part of an organization. But at some point, yeah, live off the dividends, and even further down the road, just having this as generational wealth to pass to my children. So that's really.
And this is very interesting, right? So have you also already experienced, let's say, changes in your own behavior as soon as the first dividends came in?
Definitely. So what I can say is, and we also talk about this on the community, like lifestyle inflation. I've been guilty as not being able to withstand the lifestyle inflation, so trying just to grow the income and manage the costs, of course. But I was actually listening. I'm not sure if you follow him, Sven Karlin, on YouTube, and he was talking about frugality on the episode today. That you can only be so frugal to a certain point. You need to expand your horizon, and that usually costs money to invest in yourself, basically. So I guess a lot has changed, definitely. So now even kind of the smallest, not the smallest, but decisions like, okay, should you keep the car or get a new one? That's like a no-brainer now, because you look, okay, it's how much you use it and how much does it cost. No way, just invest in dividend growth stocks and such, and just thinking about the return on your own capital with anything, right? So you get the part of your income that that you don't spend, and then you start thinking, okay, how do I get the most return on that capital? And that has changed quite significantly for me.
Yeah, and it seems like your view on material things like cars and maybe, I don't know, maybe like fancy clothes, that has certainly changed since you've started this.
Yeah, for sure. But like I said, I am guilty. I still, we get older, we say, okay, life goes on. We can't be living, frugally all the time. So more expensive vacations and things like that. So I prefer then to focus on growing the income rather than
Yeah.
spending as little as possible, because it's also, the family and the kids, and they need the education and all that, and all the things cost money in this world.
And memories, you have to make memories, and you can't do that investing for the future all the time.
Yeah, that's for sure. You can't live just for 10, 20 years from now.
This is so funny. I yesterday bought myself an ice cream of €3, and I was thinking like, wow, I'm living on the edge. Lifestyle inflation.
Nestle or Unilever?
No, it was homemade there. It was invested back in the local business.
Yeah.
But Alex, is your other half also supportive to this? Is she with you on the journey?
She is, and um, she's not so much into the details, but I do like to talk to my wife about this happened or that happened, or how much dividends received the past month, or something like that. So it's also kind of motivating for sure. And even with the kids, okay, my older daughter, she's 11, and I started maybe less than a year ago a portfolio for her as well. So my portfolio is a dividend growth portfolio, but I still want to have like a growth portfolio. So her portfolio is the growth portfolio.
Gamble
So
with the
So you,
kids.
yeah, speculate with the wife.
yeah, I mean, still, it's not a crazy growth portfolio. It's more like a value/growth portfolio, because I still can't think of those crazy multiples like Tesla and things like that. That's just out of my
Yeah.
territory.
Very, very interesting. And it resonates a lot with me because my kids' portfolio is also still, it's more in growth stocks, but still value oriented. Yeah, it's so hard to buy these shit stocks at multiple of 120 or 150, and they still have to produce revenue even.
Yeah. I give my kids full control, so they can choose who they want, why they want. If they say they want to buy a ridiculous company, I will ask them questions. Why? You sure? But ultimately, it's their portfolio, so it's their decisions. It's quite entertaining. My son actually asked me to download. I don't even know the company, some growth company. But I have to spend some time going over the financials with him this week. So seems
I'm quite impressed actually, and fascinated by what EMF talked, how your son approaches it. I mean, I quite envy that actually. So
I don't know where he gets the brains from, but I certainly wasn't like that when I was his age. But he's quite he's into it. He likes it. My youngest has absolutely no interest. He tells me he's going to play for Liverpool and he's going to have millions, so he doesn't need to invest. So it can go either way. But my oldest son actually, he loves it. ask him what he wants to do when he grows up. He just wants to run a business. He wants to own a business. He wants to understand the business. So it's what he's into, and I'll just encourage. I don't want to force my thinking on him because uh, maybe I'm flawed, or I don't want I just want him to learn, and I think that's the most important thing, just to learn and make mistakes. And I think it's important to make mistakes, especially when you're young, because you learn more from mistakes. And I don't want them to be afraid of making mistakes. A lot of investors, and I certainly was for a lot of time, are afraid to make mistakes. And that could be because your investment money you don't want to lose, or you need the money. But I just want him to have that ability to think for himself and make mistakes, learn from it, and be richer than me. So when I'm retired, he can pay for my home.
And is he interested in girls already?
Yes, I have to
Okay.
teach him about that as well. They will spend his money.
Okay. Exactly.
Yeah.
But back to you, Alex. What is your current savings rate then, approximately?
Guys, I don't measure it as such. Probably it's around 25-30%. So I've been investing only for the last 2.5 years, but I've been doing that quite aggressively.
Yeah.
Especially since March 2020. That's what was quite awesome, but too short-lived.
And do you invest then monthly, or do you build up maybe a war chest and then invest, or what's your strategy with that?
I try to do it monthly, and even I can do 2-3 trades per month, depending on how much capital I have, because that tends to vary. And then obviously I look at what's most attractive at the time, what fits the current allocation gaps that I have, where I want to add or not. So currently it's a little bit difficult because Unilever is my top position, but I can't be like you, EDGI. I just need to buy more Unilever at 40 and 41 and 42.
Yeah.
And do you use a local broker, or do you use maybe one of the common ones in Europe? Or what kind of broker do you use?
I use Saxo Bank.
Okay.
Because for for a Lithuanian-based investor, it's quite tricky. And actually, when I started, I didn't realize that I could use interactive brokers.
Okay.
And Saxo Bank, it's like the fees are much higher, the transaction fees, and then they have these what do they call them?
Maintenance fees.
Yeah, and those things, and they keep growing. So I really need to kind of think about that. But for the growth part of the portfolio, I use interactive brokers, and also
Okay.
for options trading as well.
And is there any brokers within? They don't have to be online, but is there any brokers within Lithuania that people could use? Maybe they don't have access to European ones.
Well, they can trade through the banks.
Yeah.
The banks usually have, and again, those are Scandinavian banks, so the online banking is quite awesome, I would say. As generally, all the online services, it's
Yeah.
quite advanced. But the problem when I started investing, the fees the banks charge were like astronomical. They've gone down considerably over the past year or 2 years, but like it was crazy.
Yeah.
Even
Same as.
just 2 years ago, it was. And the first trade I actually did through my my local personal bank. I mean, you can't, if you invest like every quarter or once a year, sure, that's fine.
Yeah.
But if you do that regularly, more than once a month, no way.
I don't think banks or these types of institutions are for, I would say, small retail investors like us. I mean, they're for people that with loads of money that want to put money up front and buy lots, like Warren Buffett maybe or someone. But for us, you can't look past Interactive Brokers or DeGuero. I think are probably the two best.
Yeah, well, it's interesting, Alex. I also have shares at Saxo Bank. I got it because they acquired Pink Bank from the Netherlands, and they gave us a service that we could move for free. I'm waiting now for 5 or 6 months to get my shares transferred to Interactive Brokers, because otherwise it cost, I believe, 10 or 25 euro per line item. I've got like, what is it, 25 positions there, so that will be really costly. So I'm still waiting. I need to follow up again. I've got it in writing that they will do it, but they told me they have a really huge backlog. I guess half of the clients from Bink wanted to move out because the user interface was horrible. We were really spoiled with the user interface at Bink. They took it out, and even just finding your dividend report is not so easy at times. So that was for me the reason that I wanted to go away. But also the maintenance fees are, I mean, they're really really not nice. And then 8 euro for a transaction, plus even more if you do bigger size, 2.75 euro for an option trade, which is like 75 cents at the Hero or Interactive Brokers. I mean, these fees are just killing me. I want to get rid of it as soon as possible, but I'm just waiting.
That's actually very quite interesting what you said about the user interface, because I find it quite okay for me and much better than Interactive Brokers. I don't know why.
Oh yeah, Interactive Brokers is the worst in the world, probably. I'm used to the Hero or Trading 212, and they are just brilliant when you think about it from a user interface, right? It's really like from the tap of your phone, you can trade, and specifically the Hero has a really nice interview. So yes, if you compare Saxo Bank to Interactive Brokers, the user interface is probably even a little bit worse at Interactive Brokers, but at least you don't pay all those costs. And for me, it is easily a few hundred euros per year that I'm paying to Saxo Bank that I can avoid by moving to Interactive Brokers.
We might switch it up a bit because I know you. I mean, one area we lack maybe on this show is emerging markets. We focus a lot on maybe European and US companies, but there are other markets out there, and I know you have maybe some positions in emerging markets. So maybe you might talk to us about some maybe benefits or opportunities in these types of markets.
Yeah, sure. So, I mean, we all know and love to invest in European and US based stocks, but kind of okay, it's the rest of the world that's out there, including China and other developing countries. And actually, one of my favorite YouTubers, as I mentioned, is Sven Karlin, who is not a dividend growth investor, but he's a value investor. But I quite like his analysis, and he's quite focused on emerging markets, the cyclical companies, materials and things like that. And from him, it's quite a lot of gems that he helped uncover. So like Latin America, South America, China, of course, and he did like Russia for sure up to the recent events. I think there's no denying, like that China will be the biggest economy in the world, and maybe a decade or two after that, it will be India, and the population there, it's growing still quite fast. The incomes are growing probably even faster. So I just think it makes sense to look there as well, and not put all the eggs into the developed world, so to say. But one, of course, needs to keep in mind the risks. So there's usually more value in those markets, but it does come with more risk from a certain standpoint. But I just think that it's really a smart move to look for companies in other parts of the world. and maybe not have them as your biggest positions or things like that, but just allocate a certain portion of your portfolio. And there might not be like a dividend growth, a dividend aristocrat type culture there, but the growth itself in those markets might easily compensate for any volatility from one year to another.
Yeah, and it's nice that you mentioned it. And you don't actually even need to buy stocks, right? You can easily buy also an ETF. And I believe I will try to put the ticker in description later because I forgot what the ticker is. But the other day when I made research about, I said, these UCIT ITS ETFs that we have available as Europeans, I actually found a really nice high yield ETF focused on dividend growth in the Asian market. I believe it paid 5 or 6% and still had a quite positive track record. And this might actually also be a good idea if individual stocks investing in dividend growth stocks is not so mature yet in the regions, to go for such an ETF in such case.
Yeah, I think that's also an option. From my perspective, it's just quite interesting to analyze these companies and read what other people have analyzed, not just do it by yourself.
There's a guy on Twitter. I don't know if you follow him. He's called the Value Investor Down Under, and he analyzes one company from the Australian stock exchange every week. There's a deep dive on Twitter. It's always quite interesting. He's always pinging me with interesting companies from Australia. I just struggle because I don't know these companies, and it takes time, doesn't it, to understand what these companies do, to understand the markets and the risk. And honestly, at the moment, I don't seem to have those times, so which is why I stay away from it. But certainly from a returns perspective, or if you want to maximize your money, it might not suit a dividend growth strategy, but there's certainly a market there for there. Can you maybe tell us some companies then that you have, or maybe that you don't have, but are looking at that are quite interesting?
Sure. So for instance, in China, what I have invested in China, well, there's Tencent, which is technically a dividend stock and a dividend growth stock, but it's quite a low dividend. But I still wanted to have it as one of the big Chinese three, namely Tencent, Alibaba, and Baidu, into my portfolio, which is strictly dividend growth stocks. So then also there is China Mobile. So I just think, okay, all these big telecom companies in the world, like the AT&Ts and Verizons and so on, that just seemed like so much better value. And you just look at their investor presentation. Okay, how many subscribers do you have? Oh, roughly 1 billion. Okay, good. What else in the emerging markets? So I have also, I think, utilities in these emerging markets also, because okay, consumption is growing, population is growing, and utilities tend to represent, let's say, more stability and slightly lower risk. Definitely don't go with any banks in the emerging markets. That's a no-go for me. So on the utilities side, for example, I have, let me just find it. It's called Copel, which is a Brazilian utility. It's Companhia Paranense de Energia, which is one of the states in Brazil, the state of Parana. There's a utility, electric utility company there. And another one is a beverage company called Ambev, which is actually partially owned by Anheuser-Busch. So they sell the same beers throughout Latin America. as what Anheuser-Busch sells in the rest of the world. But of course, they have their own brands and their own approach. It's an independent company, but they do share some brands. Also, I have and I had have still a couple of stocks from Russia. One being Gazprom, and another being Fosagro, which is quite a wonderful company that manufactures fertilizers. So they mine and they produce the fertilizers, and then they sell them throughout the world. But now that's been completely shredded due to the current situation. So that's something that I try to, not think of emotionally, but think of rationally. That okay, that was the risk. It's an emerging market. We all knew the potential with kind of any Russian escalation could happen, especially since the annexation of Crimea. And okay, I chose to kind of downplay that risk, and I paid the price effectively.
Well, what can I say? Are you able to even hit the sell button at the moment, or is this just totally not working?
No, not because I bought shares not through the Russian stock exchange, but the ones that are listed in London and in Germany, and those were frozen basically since a month ago or something like that.
But you keep those shares, right?
Yes, yeah.
So if it come back, I don't know, maybe 5 years or whenever, in whatever time frame, you still own those shares. So there's always still a chance that money is not gone.
Yes, there is a chance, but for me, mentally, that's sort of a write-off.
Yeah, it's probably a good lesson as well in there, and good at managing risk, I would imagine.
Yeah, I mean, just it was a bit hard to swallow.
Yeah.
Like I said, 3 or 4 weeks ago or 5 weeks ago, when things started happening, and it wasn't frozen at first, and it was just kind of extremely volatile. And I just at a certain point, I even added more shares because I just couldn't think that this would go so bad.
But on the other end, Buffett always says, like, for me, they can close the stock market for 3 years, and you need to invest in businesses that will still exist by then. And we can safely assume that Gazprom will at least still exist by then. They just got all the Shell assets, ExxonMobil assets all handed over, right?
True, but we are not we are European investors, and the whole flow of money, it's just almost impossible now. Europe can pay for for oil and gas, but that's pretty much it.
Yeah. Good. Well, Alex, I think we could talk for another day about all of these kinds of topics. That's what I also like about Dividend Talk. It's kind of pub talk. So thanks so much for sharing your story. But I think we should go also to some of the listeners' questions, because it's not only us who have questions. There are also quite some listeners that have been having interest in your story. And for instance, the first question is from Tony Kennedy from Facebook, and he is asking like about your views on BASF and specifically also the Russian impact around it.
Well, I think BASF, and that's reflected in the share price. It's just so many headwinds at the moment. What I pointed out a couple of weeks ago in the community was their let's say oil and gas subsidiary called Wintershall Dea, which they were supposed to IPO, but that was postponed or canceled due to COVID or something like that. And so there will be write-offs there because that company was invested in Nord Stream. So that's dead. At least for the foreseeable future, and I don't really see how that will be resurrected. So that's one thing. But okay, write-offs, it's okay, we'll hit the balance sheet somewhat, but they can deal with that. The other thing is the energy cost and inflation of that. So it's no surprise that they spend a lot of energy and a lot on energy to kind of generate electricity and steam and also produce all their chemicals, and that's been skyrocketing obviously and will probably be elevated for the foreseeable future. And actually I looked into their investor website, and there was an investor day on the 28th of March, I believe, and that fully was dedicated well, not just to energy cost, but the whole climate change and energy transition. And it just showed that, okay, there will be so much investment needed to transform their supply chains, to replace oil and gas with electricity, with the wind and solar, and it's probably will impact their bottom line for quite some time. But the good thing that I see that, and I think they've been implementing it quite nicely and saying it, that okay, the products that are manufactured with net zero emissions or close to that, they will cost more, so they will get more revenue for that. And it was in that presentation where they said that those kind of products will be 5 to 15% more expensive compared to, let's say, the older products. So I think they're navigating it quite well, and I just think that it's quite good value still for long-term investors at the moment. But for sure, there are so many headwinds now with the climate, with the conflicts, with the sanctions, and all that.
Did they mention anything about? I know they had a couple of joint ventures, didn't they? They had one with an electric vehicle company. I can't remember the names. Shan, I think, and they also had another joint venture with one of the wind companies. I can't remember. Cost Ziwid Wind or something. Did they mention anything about those?
There were some joint ventures mentioned. The wind company, well, there were several actually. I'm not sure if I pronounced it correctly. Vattenfall.
Yes,
It's
that's the company I'm talking about. Yeah.
Swedish or Norwegian company. So of course they need to collaborate with multiple parties, and inside Germany even it was mentioned like a collaboration with Henkel,
Yeah.
where they would be basically transforming the whole raw material mix for what Henkel manufactures together with them. But it is a big company, so they have scale. They have sites like in Germany, in Antwerp, in China, and elsewhere. And the demand will grow, and the world will continue to develop. It's just that, yeah, I guess at this point, when you think about it, the drop in the share price isn't actually that surprising.
So I think so I will also watch this because the quarterly reports are coming up soon, right? So we will see some of this already getting into it. But I'm also thinking quite logically. Okay, so we have the energy prices being impacted by inflation. But on the other hand, it's the largest chemical producer in the world. It's not like supply chains have a lot of option to suddenly move away from BASF. So I'm really curious to see how much of this inflation they can just pass on to the customer. I think that BASF has quite a strong position, so I wouldn't be surprised, and that's what I want to see, that they can just pass it on almost one-on-one. And in that case, BASF might be actually still having a strong position. But, BASF is cyclical, so the best time to buy is at the bottom of a recession. But what I always say lately is like, I don't want to buy BASF at the bottom of a recession. I want to buy Nike at the bottom of a recession. So for me, I would probably wait for a quarterly report and then buy it more for the yield, assuming that, for instance, BASF would have a strong balance sheet. And I think that's what people need to do their homework on. Can it still pay the dividend over the next 5 to 10 years, right?
Yeah, no, I agree, and I think the dividend yield is attractive enough to take that chance on them. But it's certainly a big year for them, and I'm interested. I'm interested to watch the investor relations. I haven't watched it yet, but I'm also interested in their annual report. So it'll be good to see. So the next question is from you. You have a question for us?
Sure. So, what do you guys think of Bayer's recent share price surge?
I mean, I personally think that the market may be a little bit more optimistic than it should. And we tend to see this before earnings. We saw before something, it might take a little run up, and then we'll be hit. There'll be more litigation, or there'll be something in the report, and it will certainly shoot back down. So I don't know. I don't know if there's news that I've missed, or is there something I've missed, but the litigation hasn't gone away. I haven't heard any positive news, so I'm not quite sure why it's going up. But we will see. We will see in the next report.
So +1 to that, but I've got one theory on why it went up, because I believe that we have seen a rotation into the pharma industry. Look at AbbVie. I think it's at, what is it, $160, $170 now. I bought it at 65 or 70. Look at Bristol Myers. It's trading around 75 now. A year ago, it was trading at 50 something. I think there's just a giant rotation into pharma. Probably these are like anti-recession stocks because the patients keep on dying and being in need for medicine. And I think Bayer is just part of this rotation. Probably people are massively buying pharma ETFs, and then Bayer is probably part of it because generally there's no news. Maybe the fact that there's no news is also not pushing it down, but we're expecting in 2-3 months from now a big news around court decisions, right? And then we will see whether their plan around Monsanto and the settlements will work or not. So that's, I think, why Bayer is running up, nothing else.
Yeah, it's quite funny you say that. And sometimes when there's no news, investors have short memories, and they maybe forget. And we see this with Intel, don't we, all the time? We always know around earnings they're going to drop because investors get too enthusiastic. And we know from looking at what they say and their numbers that they're not going to grow this year, maybe next year, but we're going to have to wait until all the buildings are built and the semiconductor industry sort itself out. So I think maybe just people have short memories, and we will see if there's good news. If there's good news in the next one, and they've resolved a lot of this litigation, this could hit 100 quite easily. My money is on that it hasn't, and it will come back down as well around the 50 mark.
I think I agree with EDGI actually that it is a defensive sector, right? So correct, Bristol Myers, Merck, those are the position. Well, J&J has gone up, but not by as much. But Bristol Myers and Merck have gone up quite significantly. Yeah, and I think that's the rotation.
Good. Simon has a couple of questions. One is about Enagas, which he doesn't own. The free cash flow has been steadily dropping, and the dividend ratio is fast approaching 100%. Obviously, many high yielding stocks fall into this, which is why they are high yielding. What is, in our experience, best practice in terms of handling this situation? And do you have a ceiling limit on dividend coverage?
This question suggests already so much here that Simon feels uncomfortable with owning Enagas. So I would just sell it. If you feel uncomfortable with it, get rid of it. You shouldn't lie awake from your positions in your portfolio. I mean, I own Enagas, and he's right. The fundamentals are slightly deteriorating, but also with Enagas, you need to look also at funds from operations, right? Need to more look at it as from a utility point of view than purely, let's say, cash flow or earnings. I treat it as a bond. Yeah, I once bought, I think, 100 shares, and I don't ever look at it anymore. Once a year, I still feel comfortable with the risk reward, but if someone doesn't feel comfortable with it, they should just sell it. It's not worth it.
They have a dividend yield, don't they? I think they've guaranteed a price for the next 2 years, 2024.
Yeah,
Am I right?
exactly. Yeah.
So you know what you're getting with these guys. Obviously, there's regulation pressures and there's outside pressures that exist, but it's never going to take off in share appreciation. It's purely a yield play, and that's all it is, purely just for generating cash flow.
So if you think about the bull case, right, and that's where I wanted to actually start looking into Enegas again. I mean, the world wants, Europe wants to shift away from Russia with the pipelines, and then Enegas owns this massive gas terminals in Spain. Yeah, where does the gas come from then? From the Middle East. You put it on a tanker, ship it to Spain, and distribute it further. So if Spain also invests more in the connections of gas further into deeper into Italy and France, which I think they have already some.
Mhm.
I mean, logically, I think, you know, if we can't get it from Russia, we'll get it from Saudi Arabia, and we'll use the Enegas terminals. So it's a theory I have in my head. I need to confirm it still. So, but I believe there is also some bull case here around Enegas. So if any of the listeners has studied this already, please let me know. It saves me time. But this is where my head is going towards to when I think about Enegas.
Good theory. Simon has a question specific for you, Alex, and that is, if you were on a desert island, what stock would you take if you could only take one?
So this might surprise the listeners. I would pick one of the Canadian banks, and I would pick Royal Bank of Canada. That's what I have in my portfolio, just because the dividend history for those, it's 5 banks basically. It's just astonishing. Okay, there might have been some freezes along the way, but they've been paying dividends, some of them since 1830s. So it's quite astonishing, and it's also quite a well protected market. So there are like these 4, 5, 6 banks for the entire market, and it's quite safe, I think.
Nice choice. There are only one country where I would agree with banks.
Yeah, we had the dividend guy on here recently, and he's a huge, obviously he's Canadian, and a huge fan of Canadian banks. I don't have any Canadian banks, but honestly, probably should. They seem to be the best run businesses in the world, really.
Thank you. So the next question then, and this one goes to you, Derek, from Ron Kingping from Facebook, and he's asking about any thoughts on the previously mentioned ZIM ticker, because he has it on his watch list but can't come up with a fair value strike price.
I can't come up with a fair value strike price either. I know that the dividend yield is quite high. I think we said before it's based on shipping rates at the moment, and they're making a shit ton of money because shipping rates are so high. That is cyclical. We're going to see that drop at some point. It's quite a young company as well. It's hard to gauge a history. So I purely bought them from a dividend capture point of view. I have no real interest in following the company or any of that. Maybe whenever they have the next dividend, if it's going to be $17 again, I might try something similar. But I would have no clue how to value a company like this. No clue.
Good. Thank you. So then the next question is from Centrino, and maybe for you, Alex. He is asking about our top 3 yielding utility stocks. And do you own any utilities? I believe you used the word utility already a little bit earlier in the show.
Yeah, actually, one of my first positions was Red Electrica, when I basically started without knowing what I was doing, just reading on the internet. But it's still a position that I have and will continue to have. Also, I have Fortis, which is a Canadian utility. Their utilities is kind of similar as with the banks. They're just like dividend aristocrats / kings over there. At least 2 or maybe 3 companies that I know. So it's called Fortis, and the other one was the Brazilian utility that I mentioned, Copel for short. I think that's it. So I like the utilities sector as far as, stability and slow growth, but obviously you won't beat records with that kind of growth. So it's like like a bond proxy of sorts.
Yeah. Super. Thank you, Alex. And then the next question is from Dividend Newbie, and he's thinking of scrapping his current strategy. So looking into undervalued stocks, mostly based on other people's recommendations, and instead just buying into 5 to 10 core stock holdings from him, regardless of value, until he gets better in analyzing stocks himself. Any thoughts about this?
My thoughts would be, if that's how you feel at the moment, you may be better off in ETFs until you're more comfortable finding your own strategy. There's nothing wrong with limiting yourself to 5 or 10 of your core stocks, but if you're not confident in analyzing companies, why are they your core stocks? That'd be my first question. So maybe an ETF may be better, and do some reading and research until you're more confident in your own style. I did something similar. I was basing it on recommendations of other people, and it never works out well because you don't have their convictions or thoughts, or if something changes, they might not share that, and you might be
Yeah.
sitting on a sitting duck. So you're better off having your own thoughts and feelings and emotions and getting a handle. But
Yeah, I would say it's also his own money, right?
yeah,
So it will be protected in ETFs, I would advise as well. And he's also asking, by the way, as a follow-up question, if we have any hobbies outside of investing.
yeah, I've a few: golf, football, are two of them. Alex,
How about you, Alex?
Well, football is it's a hobby, but unfortunately, I don't play. I do love football as a fan, but other than investing, traveling probably is the next hobby.
who do you like in football?
Juventus.
Ah, nice team. I'm glad you didn't say Man United, otherwise we would have to stop.
I think Juventus gave up already the possibility of a title, right, this season. Isn't it Inter Milan this year?
It's been difficult the last couple of years, so it's quite painful. But yeah,
Good.
fan is a fan.
Exactly.
Quickly then, next question from Dave Specialista. He's asking, do you have Inter RAW, ticker GPWIRL, in your portfolio? If yes, what is your future outlook for this stock?
No, I don't. No.
I have no clue what this stock is about, to be fair. Do you have any idea?
It's I think it's the electric utility in Russia. Probably, well, it is like a state-owned company, like most of the large ones there. But I haven't looked into that one at all.
Okay, sweet. There's a question from S-Lint, which is about BASF. I think we've talked a little bit about them already. And the last question is from Dividend Harliard, and he asks you what you think is the best dividend stock from ticker symbol EE, ticker symbol LV, and ticker symbol LT.
Derek, those are country codes.
I hadn't a clue what they were. What countries are they? Oh, Estonia, Lithuania, Latvia.
Yeah, exactly.
I did not
Come
know
on.
that.
You need to. If you like traveling, you should come over one time to one of the Baltic states. Come on, do your homework.
I've never been too far east, so I was like, I don't know these ticker symbols. Who the fuck are they?
Well, honestly, guys, I mean,
We'll have to ask this question again before.
it's I haven't looked really into the Latvian and the Estonian market, and in Lithuania there is not that much to choose from. You can choose the biggest electrical utility. The name now, for some reason, I can't remember. So I would just look elsewhere. It's just the stock market in at least Lithuania is in its infancy. So I think we still need more work to do there before we could say that's the best stock in Lithuania from a dividend perspective.
I'm just looking up country codes. I'm sorry.
Super, Alex. These were all the questions. And thank you to everyone who has been submitting the questions as well. Some really interesting were in between there. But this also brings us to the last stage of the podcast, and time is really flying when we're having fun. So, Alex, do you have any stock pick that you would like to, or suggestion that you would like to leave with us and to the listeners towards the end of this podcast?
Yeah, I actually want to mention one stock, one company, which I actually don't remember if it was ever mentioned on the show. It's Mondelez International, and it's a consumer staple, which has lots of brands like Milka, Cadbury, Oreo, Toblerone, and Belvita, and the various cookie brands, and so on. And what I like about this company, okay, it's slow and steady growth, slow and steady compounding. There's not like super fast growth or anything like that. It was actually previously the Kraft Heinz. So the current Kraft Heinz is not really the former Kraft Heinz. They renamed Kraft Heinz into Mondelez International. But it's just a collection of brands, and they're quite attractive from a dividend growth perspective. So the dividend yield is not very high and not very attractive, but they do grow it steadily. The valuation is also not very low, but also not very high, probably like low 20 PE at the moment, or just about 20. But really, what stands out for me, it's when you go into a big supermarket, it's like it seems like that's the company that has, to me at least, the most shelf space, because all of these cookies and chocolate bars and this and that, and they expand, innovate, and create different mixtures of all of these brands, like Oreo ice cream. I don't know who makes the ice cream for them, or also Toblerone ice cream, or these various cookie types, and it's just a whole aisle, basically, not an entire aisle, but like so much shelf space that they have, and it's just kind of fascinating. It's not really a company under the radar, for sure. They're big enough, but just feels like they're not talked about quite as much. And I think they have a CEO who's Dutch, I think.
That might pretty well be. I have not looked enough into Mondelez, but I do know that it's one of those slow compounding companies, and I like slow compounding because they are hard to kill. And to your point, yes, you're right. And tomorrow when I go to the shop, I will pay additional attention to it and grab some of those and check if it's indeed Mondelez on the package. And maybe I'll have to look into the stock actually now that you mentioned this, because I like consumer staples and specifically these kind of ones. Good pick. So, Alex, thank you so much for joining us today. It was very, very interesting for me also to have someone from Eastern Europe on the podcast again, after I believe Dividend athlete who is from Estonia and a professional football player. And yeah, it was really interesting for me to hear about your journey. And I don't know if it's about you for you as well, Derek, but it keeps inspiring me to hear other
Yeah,
people's stories.
exactly. It's what Dividend Talk's about. Just members of the community sharing stories, and it's how we all learn. You've brought a new perspective talking about emerging markets, which, as I said, is something maybe we should focus on a little bit more. Give it some attention. So thank you for that, and it's been a pleasure having you on and chatting to you.
Thanks for inviting me, and this has been quite an experience for me. So I don't keep a public profile with blogs or podcasts and such. So this is a new experience for me, and I think it's the passion, and when it's about passion, you can talk for hours, literally, which I guess we've kind of been doing.
Exactly, and to our listeners, if you stuck around this long, as always, we sometimes we try to keep it short, but it's not always possible. Thank you for sticking around, and hopefully we will see you all next week.